Welcome to the MBPI Home Inspection Network. Today we're talking to Andrew Monticone, Senior Loan Officer of Leader Bank in Needham. Say hi, Andrew, and tell the listeners a little bit about yourself.
Hey, no, thanks, Todd, for having me, and excited to be on the Zoom interview. And basically, I've been originating mortgage loans for about 14 years now, and I've been currently with Leader Bank since 2010. So I'm going on, I can't believe it's been 8 years. And I basically originate residential mortgage loans, and been doing a ton of volume over the last 10 years, and just really hit the ground running, and really love what I do. It's a great opportunity to get in front of homeowners and to be a part of their process, and to be a part of, a small part of helping them achieve home ownership.
So in my dealings with home buyers, one of their biggest concerns is how to get approved for a mortgage. And
Sure.
Is it really important to get pre-approved prior to looking for a home?
I think it's one of the most important things is to, begin the process by getting pre-approved. I think that saves a ton of time, and it basically does a few different things. One is it saves you time, so you're not looking at properties that you can't afford.
Mm-hmm.
Or, that's the first thing. The second thing is if you do find a property that you like, it lets the seller know that you are a qualified candidate to purchase that home. Most sellers and listing agents will not really acknowledge your offer or accept it until you have been pre-approved, assuming it's not a cash offer. So really, it's a time saver, number one. If you are about to make an offer, you really do need a pre-approval to have your offer taken seriously. And really, probably the third, which is most important or equally as important, is that it basically lets the buyer go over how much the monthly payments are, and really goes over the specifics of how much it's going to be, the closing cost, the monthly payments, and things that are so important in the process.
So to speed the process along, what documents should a buyer bring to you to get the process rolling?
Yep, really easy. Their last two most recent pay stubs, their 2000 or their two most recent years of W-2s. So, right now we're in 2018. So 2017 and 2016 W-2 statements, a copy of their tax returns for 2017 and 2016, and their bank statements for the last 2 months. All stuff that you can really get online, especially with all online banking and things like that. So very easy documents to get, and all can be securely uploaded and things like that. So very easy list to get.
Mm-hmm. Now, most people think you need 20% down to buy a home. Is this true?
That's still one of the most common questions that I get, is people think they can't enter the home buying market if they don't have 20% down, which is really not the case at all. You can actually buy a home with zero down right now. So no money down at all. There's great programs out there with 0, 3%, 5%, 10%, 15%. So you do not need the full 20% to put down on a mortgage.
Well, that's good. That'd be pretty much out of reach for a lot of people in their mid-20s to mid-30s to be able to put 20% down on some of the moderate-sized homes that are out there.
Well, with the sales prices where they're at, and especially in this area, the Boston metro, Massachusetts area, the homes are expensive. Entry level can be $400,000, $500,000 for a lot of people, and that's a lot of money to put down. So it's reassuring to the buyers when I speak to them that you don't need the full 20%.
What are the current mortgage rates, and where do you see them heading in the future?
So right now, depending on how much down that you have, you can still get into a very low 30-year fixed around 4.375 to 4.5. If you have less than 20% down and maybe not perfect credit, you're probably going to be in the upper fours, 4.75, 4.875 on a primary residence home. So they're still very, very low. I think, anything with a 4 in front of it, even a 5 in front of it, historically is so low. They are up from the historic lows that we saw in 2016, which they were down the low 3s. As far as where I think rates are going to go, I think they're going to slowly increase over the next couple of years, and I think that within 3 years we'll be in the high 5s, maybe low 6% in 3 or 4 years, maybe sooner than that, which is still low rates, but I think it's just all about expectations. And you may see the housing prices cool off a little bit if we see rates increase that much.
To put things into perspective for our listeners, where were rates about 10 years ago?
Going back 10 years ago, we're entering in 2008, which was probably where the crash was about to start in the real estate industry. And I can remember doing interest rates of, depending on the program, I did some 30-year fixes that were 6.875, 7%. Some programs had 7.5%. And then, of course, the following years after that, once you got into 2009, 2010, then they slowly started coming down, which obviously created a refinance boom for a few years.
To really put things into perspective for our listeners, when I bought my home in 1984, interest rates were 13.5%, and they had come down over 3 years from 18%. So the rates, even at 5 or 6, are still historically low. So from start to finish, how long does the process take to purchase and get a mortgage on our home? Or how long should it take?
Sure. So as far as timing goes, if you're basically, let's say you have an accepted offer on a home, and you've had a home inspection and it came back clean, and you're done negotiating with the seller, and you sign a purchase and sales. From the time that you get an accepted offer, from the time of closing, typically, usually the listing agents and the buyer's agents and the sellers and buyers usually agree from anywhere to a 30 to a 60-day close. However, we are seeing faster than that. I've had scenarios where people are asking me for a 3-week closing, which is so quick. There's a lot of moving parts, and we can do it that fast. But in general, it seems that most people are closing on average anywhere from 30 to 45 to 60 days, depending on the scenario.
So I have one question that we didn't talk about before, but in the age of automation and everything on the internet, why would somebody benefit from using a mortgage lender such as yourself as opposed to one of the online services that might promise one thing but give another?
Sure. So in my line of work, it's known that the online companies, when I say online companies, ones that only get business from online. Some of the larger institutions like Quicken Loans and Rocket Mortgage, those are considered like online companies. In my world, they're known to have the highest rates and the highest fees in the industry. And when people who have basically gone there and said, okay, hey, I got a quote from Quicken, and then they come to me, is sometimes the closing costs are double or triple compared to what local lenders can offer. So that's one thing. A lot of the online companies are more expensive, and you're also getting somebody that's not local to the market. They're not here. They're not physically in the Boston area. They might be in Wisconsin for all you know, and there's really no accountability. If you're not happy with the process, they don't really know you from anyone. So, where myself at Leader Bank, we only get business by referrals, and you can only really get to us if someone referred you in, which is great, but we save money on advertising that way, and we can pass on the savings to the client. And a lot of times too, when you're working with those online lenders, they're really not an expert in their field. There may be kids who come right out of college who are brand new, making a very, very low salary where the company's keeping all the bulk of the proceeds. And they're just, they're just not well trained, where all I do here is mortgages. I've been doing this full time, like I said, for about 14 years, and I'm definitely considered an expert in the field. And I'm going to help guide that buyer from start to finish and go over all their financing when it comes to the mortgage and really dig down in the numbers to make sure that they're comfortable with everything. So it's a really good question that you ask, and it's funny when I speak to someone after they've called an online lender, they're kind of just like, wow, this is such a different experience, and I totally understand everything now. And there's definitely value in that on top of saving money.
Mm-hmm. So 2 more questions. The first
Sure.
is, a lot of people in our business and people outside our business use the terms pre-approved and pre-qualified
Sure.
interchangeably. But if I understand correctly, they really aren't, that there is a difference between being pre-qualified and pre-approved.
Well, I think it depends on who you talk to. We do what's called pre-approvals. Okay.
Mm-hmm.
That's what we call our pre-approval letters. When somebody gets pre-approved, we send them a letter that basically says you are pre-approved. And that's what the real estate agents and the sellers want to see. They want to see the words pre-approved. However, there are companies that call it pre-qualification. Whether their letter says pre-qualification, ours has never said that, so I can't really speak to that.
Mm-hmm.
But all I know is that when you're making an offer, you want those letters to say pre-approved. A lot of times we talk that those terms are interchangeable, but when it comes to actually going through the process, even if a bank calls it pre-qualified, the listing agents don't want it because it's the perception that pre-qualified is not as a thorough job as getting pre-approved.
Correct.
So that is why you want that letter to make sure it says pre-approved.
And the final question is there anything that you'd like the listeners to know that I haven't asked you about this process?
I think one of the most important things is when you're starting the process is to speak with a mortgage professional and someone that you're comfortable with, and do it as early as you can. A lot of times people come to me once their offer is accepted or in the middle of them looking for homes. Mm-hmm. And I think they would have saved themselves a lot of time and aggravation if they got to me at the beginning of the process. So it's never too early to speak to a mortgage loan officer. Even if you're a year and a half, 2 years out, it doesn't matter. It's a good thing to go through that process, and it's easy. And most of it, pretty much all of it, can be done over the phone. We can also send an online mortgage app as well that they can fill out their information and secure all their documents securely online. A ton of our customers do that. Or I can do it right over the phone for them. So it's really, I make it as easy as possible for people to reach me and go through that process.
Oh, thank you very much. All the information I'm sure that the listeners will find very helpful. Hopefully they understand that they need to be looking for their mortgage before they start looking for their house so they know what they can afford. This is Todd Whiting from the MBPI Real Estate Network, and talk to you soon. Thank you for watching the MBPI Home Inspection Network.